Thanks for that market report, Kyle. I mean, what another crazy week on the Uniswap front. Definitely considerable price swings there for real estate assets. But this could be seen as a downside to innovation like this. But I know you'll get to the root of it, Kyle. And in the end, Realty's assets continue to grow and are some of the most liquid security tokens available usually. So
Absolutely, and yeah, these little price volatilities. That's kind of what you get with a decentralized exchange and some of those more decentralized market making opportunities. But we'll dig into that some other day. I don't have anything more from you on that front for this week. So how about we just jump right into the main topic, shall we?
let's do it. This week we're going to be talking about banks and how stablecoins will be used in our everyday lives.
So when you say bank, you don't necessarily mean investment bank or commercial bank. You're really just talking about good old retail consumer banks, right?
You betcha. Your Chase, Bank of America, your Wells Fargo, the Wells Fargos, right, of the world. Those things you send your money to just so that you can use things like debit cards and credit cards, or so at least you don't have to hide your money under a mattress, right?
Yeah, this one is one of the most hated industries in the country for their fees and abysmal service, on top of the pretty much non existent interest rates that you get on those savings accounts. But most of the people, honestly, in the crypto community really should, I think they believe that they should be removed altogether, which you can have your own opinions on. But obviously, it's a highly regulated industry with incredibly high compliance standards and license requirements, which does offer some sort of a moat for the industry, regardless of public opinion.
Right, and the purpose of today's topic is to review what that future could look like with stablecoins. So CBDCs are rapidly being tested and deployed across the world, and it shouldn't be long before we have one here in the United States. And meanwhile, billions of dollars are flying into private stablecoin issuers to tokenize cold hard cash. So it's a critical component for the digital asset industry, just as we've seen with the MakerDAO and Cura collaboration, or with Vonovio's bond, they'll probably be paying with stablecoins as well.
But with CBDCs and stablecoins, critics have brought up privacy concerns and controls, so we're going to cover that at the end too.
Indeed, this is definitely not meant to get philosophical about privacy today, but we do want to highlight some of those concerns critics might bring up. But in my experience, it seems that most people will give up their privacy as a trade off for something better, usually improving their lives.
Yeah, that's a good point. But so what do you want to lead off with here, Herwig? I mean, let's assume our economy is now using a tokenized US dollar and your bank is using the technology. What does that mean for you?
Well, I'd first start with my favorite benefit, which is that hackers and bank robbers can't steal our cash anymore. If each one of my dollars is tokenized and backed by the U.S. government, it is, and if it's marked as stolen from my bank account, which incidentally would be then in this case using some kind of a wallet technology. Well, if it's marked as stolen, it can be rendered frozen and useless, and the U.S. government or my bank with the approval from the government or the Fed can reissue those dollars right back to my account. And just like that, we now have a workaround to a problem that has plagued banks since they were invented in the first place.
Totally. That's the same benefit for security tokens that it is for stablecoins. People just can't hack what you legally own.
Well said. But what about you, Kyle? What's your favorite?
I think for me, it would have to be instant transfers, Herwig, because whether it's trying to move money out of my account, between accounts, to other people, to businesses, and simply put, it can be a real pain in the ass. And the banking system is built on an archaic network that is closed on bank holidays and weekends, and blockchain is the only thing that can enable that secure instant transfer between those participants. It's because everyone's identity is already tied to their wallet, and the clearing and settlement process between accounts can be done instantly because it's all based on the data on chain. It's not a system of which bank owns what amount of cash and how much they should decide to lend to each other, before giving it to you. And the thought that if I have access in my bank account that I can freely move it between my accounts and to people instantly, that's a game changer for me, and it solves a problem that I know myself and many others listening deal with regularly in today's financial economy.
Oh, yeah, that's definitely game changing for people's lives. That's not just a luxury sometimes, as you might point out, but it's also necessity sometimes. We're talking about survival for some people. And the cherry on top is that it might even be cheaper to perform these transfers now.
Absolutely. In principle, it should be. So, what else you got, Herwig? What do you like?
Okay, how about the capability of managing your own money? The idea is there in principle today, but it's built on a completely archaic infrastructure. If the entire economy were to be using the same tokenized stablecoin solution, programming your money habits becomes a lot easier, and the government can actually work with you even more. So, for example, marking special funds for you. Think food stamps, or more recently, the economic stimulus payments, right? In theory, the government could have handed those out instantly to 200 million banked people in the US overnight. Funds of all kinds, investment accounts, office petty cash, parents' allowance, trust managed. All these things can now be marked and programmatically used in the economy.
Yeah, that's definitely true and a great use case. I mean, how many people need those stimulus checks right now? And why would we opt for a system that takes months versus a more efficient, faster, and likely option with fewer errors that could be available to us just by using stablecoins?
Yeah, and I think that's where you'll get some critics argue that about the concern of privacy here, like you're trading your right to using money or that you have a new form of financial surveillance available to the government.
Yeah, but before we go in that direction of the discussion, we do have to remember that the government pretty much already has access to our financial records and that we rely on their fiat currency. So the government isn't able to send stimulus payments in Bitcoin.
Yeah, definitely not. I think that would require an entirely different type of infrastructure for the economy for that to work. But your point is that we aren't giving up too many more controls or privacy anyway, right?
Yeah, I mean, in a sense, that's exactly what I'm saying. I mean, think about credit scores, which is a system arbitrarily developed to help monitor someone's worthiness of extending a loan to. Loans, by the way, are the primary tool for wealth gains, such as it helping you to get a mortgage or to buy your first home. But credit scores also monitor your activities, and I would argue that a digital dollar might even be better for credit score systems because with more information, the credit score can portray a more accurate picture and understand your true condition. Additionally, it would be easier to offer money habits advice or potentially offering benefits and credit redemption opportunities through saving and proper money management, so it's not all bad.
Oh, I definitely agree with that, Kyle. This would definitely improve or create a new credit system altogether, maybe. Remember that lenders could now programmatically leverage your bank account as well. Again, sounds kind of scary, but also it's good because it can enable more opportunities to those who previously couldn't access them, right? It's just based on your financial information. So sure, you trade privacy, but unless you're doing something illicit, it really shouldn't be a problem. It should also be stressed that there can be levels of confidentiality implemented, things like anonymized data and unique identifiers for individuals, so that their personal information isn't actually compromised.
Yeah, there's absolutely some significant privacy issues at play here that we need to work out, starting with from the government. The government is notoriously elementary with their data security, and providing such a large organization with that much oversight into your daily life and spending habits is certainly a concern. I mean, we just saw the US Treasury got hacked in late December, and I feel like we see financial institutions get hacked all the time. I think that the newest metric is like 20 billion records have been hacked to date. And what happens when a hacker doesn't just access your email address or your whatever, but they can actually download an entire log of your spending history? I mean, it's very real, even without hacks. Another example might be the Department of Motor Vehicles today, which is a government agency that handles driver's licenses and other vehicle registrations, and they already sell your data. Florida's Motor Vehicle License Department made $77 million that way in 2027 alone. So once your data leaves your hands, it's for anyone else to do what they want with, and with all that financial information, it's definitely a big risk.
Yeah, I bet a lot of people didn't know that stat about the DMV. It's definitely a lot of money that they're making. They do it across the country. You're totally right that there are definitely legitimate privacy concerns here. You'd also have some concerns around the custody of your own assets, I think, too, right?
Absolutely. I mean, the more control the government has over your assets, the more at risk you are of losing them unjustly. Many believe that self-custody of your assets, whether it's securities, commodities, or M1 like cash, is a fundamental right, which is where the idiom from the Bitcoin community, not your keys, not your coins, comes from. So if you store an asset on a third party, then you're relinquishing control of your assets to that custodian. Sure, you do have legal rights to those assets, but ask people how much that was worth during a bank run where the banks literally ran out of cash from those fleeing the markets.
There's also civil forfeiture and criminal proceedings like bank freezes that can give government entities the ability to seize your assets. So these are real situations that you can observe by reading about any fallen civilization or looking at any corrupt government. Once they run out of money, these things happen. So these things are real fears that fuel development of other alternatives like privacy coins, which restricts a wallet's identification, or through Bitcoin, which promotes self-custody and aims a battle against any type of government censorship.
Yeah, but the reality is we're pretty much heading in this direction anyway. As we've mentioned already, people always seem to trade privacy for convenience, and the credit cards and online shopping that we do today already provide these firms with all of our data and spending habits. So, I mean, you really have to think to yourself, how often do you actually use cash today? And would you be willing to pay extra for your goods and services in order to preserve cash use? And if you don't answer yes to that last one, you may as well just embrace the benefits and accept the cost of losing that privacy.
Definitely. Despite all the negative talk, to close out this topic, stablecoins are an exciting innovation that can provide limitless benefits to the general public, we think. This industry exploded in 2020 and it's on the same trajectory now in 2021. So I can't wait to see where we are to close out this year. And there you have it, folks, the good and the bad of stablecoins and banks. So with that, I think we can call it a show, Kyle.
Thanks again for everyone tuning into the show this week. Remember to check out stomarket.com/news to submit any articles and join our community, or check out any of the links in the description of the podcast wherever you're listening.
You can also follow us on Twitter and LinkedIn, and feel free to connect and shoot us any questions or feedback. We always would love to talk to you, and we hope to catch you next week. Thanks for listening.